started, Suki, do you want to give our audience a quick background into yourself, your origin story, your career trajectory, and then how you ultimately made the jump into Web3 and the kind of work that you've done in the industry as well?
Yeah, for sure. Hi everyone, my name is Suki. I've been working crypto since 2019 and mostly started by trading. I started building algorithms to trade Bitcoin, Ethereum, and a bunch of other tokens back in 2019, 2020. The amount of kind of performance was really unexpectedly good. So from there, Pantera recruited me to help them build out the quant fund. So I worked at Pantera on the investment team, mostly under the liquid token fund, where I helped build out the whole quant arm to trade crypto systematically. So there, I sourced a lot of different indicators for different cryptocurrencies and build out different models to predict the market. And mostly it was pretty high frequency at the time. We tried to trade hourly, and so we also wrote our internal trading execution algorithms and smart order routing system. And we slice up the order to send it to, like, at the time, FTS, Binance, and Ember, some of the other prime brokers. um, and after that, after Pantera, I joined two companies. The first one is an NFT company as head of growth and BD. It was a very different role. It was a very Web3 native type growth role, and was a lot of working with the communities. And after that, I've been working at Certic as a senior product manager, building out their crypto compliance software. So being spending the past almost a year working on a lot of the how does regulation look like? How is that going to affect crypto businesses? How do we develop a software that effectively protect crypto businesses from potential legal or regulatory risks? So that's a snapshot of my background, and yet would love to talk more. I'll take the conversation to talk about more of the market, what drives the market to go up and down every single day, or on a longer time horizon. We'll also love to talk about like more operational or more startup Web3 topics. So yeah, we're super excited to join the space today, and would love to share what I know, and yeah, excited to meet you all.
Thank you for the breakdown. That's awesome. Look, I want to start with the algos. You said you built algos to trade Bitcoin and Ether. Can you dive a bit deeper into that? Like, what is it? What goes into building an algorithm? From someone who's no experience at all, I'm not a developer. I've never built an algorithm. Would love to know from start to finish, at a high level, what goes into that final product that lets you, and I'm assuming it lets you automatically trade Bitcoin and Ether. I don't know. Would love some insight.
Yeah, that's a really good question. So to understand quant trading, and we would first need to understand that quant trading in equities is actually really different from quant trading in crypto. And even in today's world, we've seen most of the trading that happens in the traditional equity space has been more quantitative versus fundamental. There are still a lot of fundamental shops that that has some alpha that they historically has been successful, but I definitely have seen a trend that's more consolidating to more quantitative strategies. And the same thing has been happening in crypto as well. Like in the early days, I can give you a deep dive down of how like the trading or slash like quant has worked historically in the crypto space. So in 2017, we've seen a lot of like ICOs. We've seen a lot of different price arbitrages across like different countries or even like across different exchanges. Sometimes the price difference of even Bitcoin could be like 5% on two different exchanges. So a very simple like arbitrage could be, oh, I buy Bitcoin at a cheaper exchange and then sell it on a more or on an exchange where Bitcoin is more expensive. And some of the other things that you could do early on is crypto is very based on momentum. So momentum strategies has been working for quite some time. even today, I say momentum is still a strategy that work for a lot of like smaller tokens. Although notes to be taken is typically for any strategies or for any alpha, it doesn't exist forever. So that's why we always have to keep exploring. Okay, what's the new indicators and alpha that's driving the market in today's world? So we've seen, so for example, like from 2017 to 2019, a lot of the stat arb, a lot means like statistical arbitrage and like cross exchange kind of arbitrage or even like cross country arbitrage. I'm sure you guys have heard like how the SBF story where he bought Bitcoin in US and sell it in Korea because it's really hard for some countries to buy cryptocurrencies. And from there, after 2019 to 2021, I would say it was still a really good time to trade crypto. And if you're able to source a lot of the indicators, or if you even if you just like heavily leaning on one strategy that you have that works well, that could be highly profitable. And that was mostly the case for me in 2020, where even back then, a lot of the momentum strategies works. So I'll briefly explain what momentum strategy means, or if you have any questions about like the definition of different strategies, I'm happy to like pause a bit and explain what that is and how to do it.
Yeah, so
So for example,
that was actually my next question. What is a momentum strategy?
yeah, for sure. So momentum strategies basically means, uh, to put it in a very simple words, is when price is going up, it's more likely to keep going up, and when the price tanks, it's more likely to tank. So I know it sounds very vague. It sounds very abstract. And what that means is like when, so for example, you can detect the price it went up in the last hour for 2 to 5%. And based on that, you can basically predict that in the next hour, the price most likely will still keep going up, or however you define the frequency. But basically, the momentum means that it's similar in the TradFi world, where when something is going up and everybody realize the price is going up and everybody is following into it and everybody buys and the price keeps going up, versus when the price is tanking and it's more likely that people also realize, oh shit, the market is down 10%, I have to like sell, otherwise I'm gonna lose all of my money. So it's likely that it will keep tanking. So put it in simple logic, that's a logic. In terms of how you actually code the logic, there's like many tutorials on YouTube, on GitHub, that you can just search for like momentum strategies for trading. And it's pretty well researched algorithm out there. So it's like I don't have to dive into the details of like how to build the algos, but there are tons of tutorials online that you can just search like momentum strategies, and you'll find a lot of tutorials.
So Suki, I guess the momentum strategy, and you explained it in layman's terms. It makes sense for me. Uh, my anecdotal experience is this is very likely at the beginning of a bull market, and even through bull market, and then at a bear market. It's kind of easy to predict. I'm not a short trader, but I would imagine a lot of short traders made a lot of money, going from 69 Bitcoin all the way down to 15K. But what about in like a sideways, not bull, not bear, but a consolidating market? Is that momentum strategy as dependable?
Yeah, good question. So I've done a lot of research on like market regimes. So basically in crypto, there's different market regimes, and based on the regime that you're in, the strategies that works best might be different. So for example, like during the bull market, just like you said, like during the bull market and during the bear market, like momentum strategy probably has more effect over comparing to a period of time where market is either more stable or it doesn't go up and down too much. So that at that time, what I would use is a strategy called grid strategy. So that means when price goes up by like 5%, I sell. Like there's no excuse for holding it. I'm not counting on the price to keep going up for like another 5% because that's not the market regime that we're in. And when price drops by 3 to 5%, I sell. There's no excuse of holding it either. So that's the strategy that's also pretty well established. And the logic behind that is you make more stable returns during the market when it's more stable. And it's called like stop loss and also stop win. And it's important to stop win too, because when your portfolio is going up, most people don't have the discipline to be like, okay, it went up 5% in the last hour. It may still go up, so I'm gonna hold. And then you know what? The next hour, it's probably not going to rise another 5%, and you end up not capturing the volatility or the upside that you could have if you stick to the discipline of trading. And that's what makes that's what why trading is so beautiful, right? Because essentially you're fighting against your human in your human uh, kind of intuition or your innate drive to keep making money when things are looking good. You have to be like, okay, the I made 5% in the past hour. I'm selling, and if the price like drops, and I'm also going to sell my assets instead of hoping that it will go up. So that strategy is more generate more stable return. It has like a better Sharpe ratio, it has better risk management, and the drawdown is also controlled better. But I would recommend not do that manually because people overestimate their rationale almost 100% of the times. You think you'll be rational, you think you can stop loss when you lose money. Guess what? Even SPF Caroline wouldn't be able to do that. So I would strongly recommend if you are not a disciplined and experienced trader, try to stick to algorithms. And if your algorithm work, like give give the algorithms a try versus like trusting yourself that you're not gonna be emotional about your win and loss.
Suki, for people that want to apply this strategy, I think you're right on the money when you said people are not rational, even though they think they are, and they don't stay disciplined the way they should to apply the strategy. What algorithms, or rather, let me rephrase the question. Do you sell any of the proprietary algorithms that you've built, or are they just in house and you keep them in a closed circle?
Yeah, that's a good question. Typically, I'm pretty low key on the strategies that I have or that I run. Although more recently, I've been thinking about how to make like I want to share more of my knowledge and thinking that maybe I can make that a course and teaching people or educate people on trading because it can seem really daunting when you put your money into crypto and most people lose money. Like I let me be honest, like I think most people lose tons of money in crypto, and most people only FOMOing at the top of the market, and when the market drops they sell, so they end up like losing the money, and then they're like, oh, crypto like is it's a scam, I lost so much money in crypto. Well, what actually happens is it's not different from any of the other market where it's at the end of the day it's a capital market, right? Price goes up and down, and if you only buy when everybody is like really passionate and really hyping crypto up, guess what? You're gonna buy at the top of the market, and if you sell when everybody's like giving up on crypto and be like, "Oh, crypto has no hope. It's going to die. The regulation came in. I'm just gonna sell," and then and that not only applies to most retail traders, and it really applies to a lot of institutional traders as well. Even in Wall Street, right? Like most of hedge funds, most TradFi funds that invest in crypto, they FOMO into crypto when Bitcoin was 60,000, and then they lost a bunch of money, and now they're like, and we're never touching crypto again. And guess what? That's the opposite of what a good trader should do, what a long term investor should do. And so the problem isn't necessarily with crypto being a scam. It's more so like you need to understand the things that you're trading to be able to make like actual return and make real kind of returns on your strategies. And on that front, I'll advertise for myself a little bit. If you guys are interested in learning trading from me, feel free to send me a DM. I'm in the process of organizing a lot of my own trading algos and hoping to launch some course soon. And yeah, stay tuned.
Yeah, I'm looking forward to seeing those courses when you put them out. I'm not a trader, and I don't think I'll ever really be a trader. It's just not. I don't have the temperament for it, or if I'm being honest, the discipline and the rationale when push comes to shove. So I would love to get my hands on an algo that stays disciplined for me, because I do think that a lot of the algos that high level traders like yourself use are pretty reliable. I've heard good things from just in my circles. Uh, Suki, you worked at Pantera under the investment arm, and you said you built a lot of models to predict the market. What are some big predictions that you guys made through the 2021 bull run or even beyond? And did you guys predict the kind of the beginning of the bear market? I guess you would say it was December of 2021 through kind of the implosion of um, FTX and the contagion that that caused. It ultimately led Bitcoin to go down to 15K. To summarize my question, did you predict that Bitcoin would go from 69K to 15K? And also, what other predictions do you guys make, major predictions?
Yeah, for sure. I can't comment. Unfortunately, I can't comment too much on like the exact models that we have built because that's more proprietary kind of assets. I can talk more on high level of the logic of like how you predict the market and how you go around building algorithms to better predict the risk or like when to take the risk off. So during the bull market, I think when it comes to the fund, there's two sides that I would be looking at. One is more quantitative manners, and the other is more fundamental manners. So, for example, quantitative, we source a lot of different indicators. For Bitcoin alone, I think at the time they had, again, I can't comment on the exact numbers, but we have a lot of indicators for all the different crypto tokens that would go into like, the trading side of things. And for the more fundamental side of things, um, it really comes down to the knowledge of the space and the research that go into different protocols or the landscape. So, for example, like when you see Ethereum has all these different problems that scalability, and at the time the gas fees was really high. So you start thinking, okay, if that's what's going on with Ethereum, what's gonna be the solution, right? So you think about layer twos and you think about maybe other layer ones. And once you start realizing that maybe the solution in the short term is not counting on Ethereum itself to solve the scalability issues, maybe you should look elsewhere. And if you believe in other layer twos or other layer ones can solve the problem, and that means there's financial upside for those tokens, right? So that's one of the logic, and it really comes down to like first principle thinking of like what is worth building in the space, how is this project solving what problems, and why is it important to solve it, and if it is, then should you invest in the project or should you invest in the tokens. And there's like the primary market and there's the secondary market. The primary market, most people don't really have access to, right? Because it's more venture capital or like small group of angel investors that can have access to really good deal flows. But then on the secondary market, I think most people have access to, and one of the fundamental use case and why crypto is here to stay is because it does provide that sort of liquidity for a lot of early stage companies and for a lot of projects to be able to have like capital efficiency and liquidity from a very early days versus in traditional equity market we don't see any liquidity for venture investing or uh, for any investors to invest in a project until it goes public or it IPOs, right? And even then, there's even then, you can trade their stocks, but their stocks may or may not be like a perfect indicator of like how the company is doing still. So yeah, I think my thoughts around going back to your question of the how do you decide when to take risk off. There are different indicators that I would personally look at that works pretty well. I'm personally fortunate. I can't speak for Pantera. I can't speak for like Pantera's performance. I can't speak for their strategies. But I can speak for myself. Is when everybody is really excited about crypto and the price is like through the roof, or you're like, oh my god, even like my mom is talking about crypto, and you sell. And when everybody is like, oh no, crypto is dead, regulation is coming, like I'm never touching this thing again, like people are leaving, and I buy. So, and it has worked out. It's been working out for me for, I guess, at least for now. But yeah, I think a long-term strategy is like believing things that I hold it. I try to hold like a more long term horizon, and I don't recommend, and none of the things I say are financial advice. If you want to invest in a risky asset class, I highly recommend that you should definitely do your own research, unless you are like, okay, I don't want to do the research. I want to invest in a hedge fund for people who know how to invest professionally, and then you could do that. But if you are going to trade or invest in cryptocurrencies, it's extremely high risk. I would not recommend you going into a space, putting your money there, and without knowing what's going on. So that would be my general sentiment on retail investors. And yeah.
Yeah, I think that's a good. Uh, I think it's a good point to highlight. I'm not a trader, and this is not financial advice from me, but my strategy for the last 5 years has been to DCA into Bitcoin, and then over the last, I think, 3 years, more DCA. ETH didn't make as much sense to me until about like 2019. I was a bit behind the pack as far as really getting an understanding of ETH's value prop, but that's DCA, hold long term, never sell, unless you do want to sell. In which case, the time to sell, as Suki said, is when your mom and your cab driver and the gym instructor and everyone else is telling you that they're buying into Bitcoin. Suki, you gave a good example of just looking at one component of the market and then making a prediction. You said that when you see ETH gas fees being that high, obvious answer is okay. ETH gas fees are through the roof. I should probably start looking or potentially investing in layer twos or even alternative layer ones that have EVM compatibility. Um, what are what are some trends that you're noticing right now? What are some indicators that you're noticing right now that you could paint the same example with, or paint a similar example with? Excuse me.
I think right now the market is under a very different condition comparing to 2021, and the indicators that largely worked back then may or may not still be working for the market right now. I think right now it's under too many macro impact. So, for example, if there's any risks that's being exposed or affected by the macro market, all the crypto basically tanks. There's not that much point in like diversifying your portfolio right now, because when it goes up, everything goes up. When it goes down, almost everything goes down. So unless you're a high frequency trader, unless you can you can predict the percentage difference change between one token and another, I would not recommend you like trying to like diversify your portfolio, hoping that one thing will increase, and while another token drops. I don't think right now that's the case. I think right now crypto market is under a lot of pressure from the macro environment, and like if anything happens to any companies or banks or macro environment in general, it's highly correlated between crypto market and the macro market. So, you know, unless you have some really inside information on a project like launching something or doing something different, I think right now it's highly, yeah, like I said, it's really correlated to what's going on in the macro environment.
Fair point. Suki, after Pantera, yeah, after Pantera, you went to an NFT project called MBD as the head of growth. Am I correct?
Yeah, it's called hype.
Hype. Okay, and tell us about that experience. I would love to hear more.
Yeah, that was a really fun experience. So I worked there as head of growth and BD, so leading partnerships, integrations, and worked on product strategies. It was during the NFT hype when everybody was aping into buying NFTs, and there's many stories where, oh my god, I bought a Bored Ape for like 1 Ethereum, and now it's like 100 Ethereum, and then they would show like their profit on like those NFT trades, and that was a really interesting time. I think the time that I got in was like probably at the peak of the NFT market, and after that, the market has like been cooling down quite a bit since then. Um, it was a very different environment because I think in the NFT space, the only proven product market fit is either you build an NFT exchange, NFT marketplace like OpenSea and Magic Eden, or you start your own NFT collection where you would launch an NFT and then everybody like buys it and you play the game of whitelisting and airdrops and all of that and hyping up the floor price and like only those two. So looking back from today, I think right around that time people were really excited about this because NFT, I think, is a true invention. I do think it's a true invention by in crypto because it is something that doesn't exist elsewhere outside of crypto. Like most things in crypto already exist somewhat in traditional tech or traditional finance, versus NFT is one of a kind that only existed and still only exists in crypto. So if you think about it, anything could be an NFT. You can make any asset that's non fungible to be on chain and have the ownership and have the and that's of value, right? Something is valuable because people deem value for the thing, and people are willing to trade or willing to buy. A lot of people say cryptocurrency don't have any value, but that's not true because US dollar has value because we all believe that it has value. If you give other people like US dollar, they're willing to pay for it. Like your stocks has value because people deem it as valuable. And the same thing as for Bitcoin and Ethereum as well. If you don't think Bitcoin is valuable, then feel free to send any Bitcoin to my wallet address. I'd be more than happy to accept it. um, so yeah, the NFT experience was very, very interesting. I would put it that way. I'm really excited to see how NFT evolves in during the current bear market, and I'm pretty confident it'll come back at some point with a lot more sophisticated market structure, a lot more sophisticated things you can do with NFTs, and I'm pretty excited for the current people who are building in the NFT space. They're still building, they're still coming up with things that's very creative, and I'm excited to see uh one day when the real adoption happens, what that will look like.
Yeah, Suki, let's expand upon that a bit because I find the topic interesting. What are some ways that you see NFTs evolving, and what are some legacy industries that you see NFTs truly disrupting? I know one that we are currently seeing in the beginning of is gaming or even music, as well as I keep hearing the collateralization of real estate, excuse me, the tokenization of real estate through NFTs, and giving people fractionalized pieces of real estate that they can be invested in and earn dividends on or royalties on. But would love to hear your thoughts as to how you see the NFT landscape evolving over the next year or two.
Yeah, I don't think I'm the best person to comment on how the NFT market is going to evolve, but could I could talk about some of the observations that I've made. I think in the future, the whole NFT experience would be more seamlessly, and you may or may not even realize it's an NFT. I think it will be more plugged into the real applications or even in our daily lives. You would not realize that, oh, this is an NFT. And I think the whole experience or like the adoption with membership or like the real utilities that come with NFTs will really take off. Like that's what I hope for, and I also think is going to happen. So I think in the last bull market, ex- the explosion of NFTs was more similar to the ICO days, where some project launch a token or some project launch an NFT, and everybody buys it, and everybody gets rich, and a lot of people get rug and pulled. That happened in the last bull market, and then over time, crypto market has been figuring itself out. Now we don't see any ICOs anymore. If you launch a token and just hoping that like people will buy and you will get rich by launching a token, I don't think it's gonna exist anymore. I don't think it'll happen as the same level to the ICO days. So similar to NFTs, I think the next bull round it wouldn't be like, oh, this collection launch some NFTs and the floor price went from like 0.01 ETH to like 1 ETH or 2 ETH. That could still happen, but it would just be like a lot more sophisticated mechanisms and a lot harder to do compared to the last bull market. And I hope to see more real utilities plug into NFTs and more just overall like a seamless user experience to have the main NFT adoption.
I love that comparison. It's actually one I make quite often, and basically I sum it up like this: the NFTs today are what ICOs were in 2018 and 2019. I don't know what the next kind of nascent revelation will be the next in the bull run, whenever that's going to happen, maybe in 2024, maybe in 2025. But I do remember in 2018, 2019, people saying that we'll never see a bull run like we saw in 2017, 2018. And we ended up seeing one in 2021 and, part of 2022. Excuse me. So I'd be curious to know, before we move on to your time working at Certec, I'd be curious to know what you, I guess it's hard to predict these things, but what you see the next bull run looking like, and what you think the next big thing might be. I know that we're going to be in a more mature market and hopefully a market with more utility, but let's hear your thoughts, Suki.
Yeah, I think the next boat round may or may not be. I don't think it's necessarily gonna be this year. I sometimes part of me even hope that the bear markets can stay a bit longer to shake out all the noise and to shake out all the people that don't actually believe in crypto. And it's already been happening. Like a lot of people has left crypto or stopped building crypto projects. A lot of investors no longer invest in crypto, and it's really a time of awakening and shaking up the people who are not true believers. In terms of what the next bull market looks like, I think it would like I really hope that the bear market is long enough that people build out everything that needs to be built out, and so the next bull market, when it happens, we can see real adoption, and we can see like a different level of infrastructure, a different level of things that you can do with cryptocurrencies, and you'll see a lot more projects that's servicing different needs in the industry. So yeah, I'm pretty excited. In terms of the time, I can't really comment on that. But I do think it's gonna happen sooner or later.
Suki, you mentioned that you were working at Surtech as a crypto compliance manager. Elaborate on what that experience was like and what some of your responsibilities were.
Yeah, for sure. I just before I dive into it, do have a hard stop in a few minutes. So if there's other questions, feel free to DM me. I check my Twitter pretty often.
Sure.
So
In that case, Suki, do you want to just kind of highlight the working at Surtech? I did want to ask your opinion on uh, excuse me, I wanted to ask your opinion on how regulation is going to affect crypto businesses and some of the softwares that you want to build to protect businesses from risks, and also just kind of what do you think. Well, we kind of talked about what drives the market to go up and down over a longer time horizon, but I kind of want to highlight those three before you head out. Now you have to hard stop soon here, so if you wanted to give us like a quick overview of each.
sure, yeah. On the regulation side, I've been building. So started its bread and butter is auditing businesses. So over the years, we've accumulated a lot of hacks and scams incidents data, not just data but very extensive database to that tells you different wallets and that's involving different incidents. So, as a product manager, I've worked on a data wallet risk data API. So, basically, with that API, you'll be able to check all of the scammers and hackers in the space. And on the compliance front, for the compliance product, it is more so focusing on different risks that is either sanctioned or that is like the regulator be like, hey, or like preventing you from money laundering risks. And it's really hard to do that in crypto historically because a lot of the like people that use crypto are not QIC. You don't know who the other person is. You don't know if the money go into some kind of a smart contract or a mixer, and then when the money comes out, you don't know if it was being laundered or if it was a normal kind of swap or when you use Uniswap, for example. And what that means for crypto companies, especially more recently with the regulation tightening up, a lot of crypto companies are really scared of regulatory risks. I have no company that has raised money and they were shutting down because they either SEC came after them or some regulator would knock on their door to and ask them, hey, like why did you allow this user to be on your platform or just things like that. Like I think in the past, when the regulation hasn't caught up as much, crypto was able to grow in a more kind of risk-free environment where, but a lot of that was also regulatory kind of arbitrage. And I think as US regulators get more and more educated on the topic, it is interesting to see how they're handling regulations with different crypto companies and a lot, especially if you're handling money transfers, right? I think right now anything custodian is pretty tricky to do. Anything centralized is pretty tricky to do too because you're basically taking people's money and you're either allocating that somewhere or you're buying or trading for your clients' money. So all of that are still pretty tricky to deal with. From if you're if you're a centralized exchange, if you're a prime broker, that's custodian, and I still think that leaves us with more room for DeFi, although DeFi is kind of still under the similar risks in the United States. But you don't need to have as many licenses comparing to sci-fi. So yeah, I don't know if that answers your question, Noah.
No, yeah, it certainly does, Suki. And I know that you have a hard stop, so I want to be respectful of your time and thank you so much for coming on with us today. If you ever want to come back, and expand on some of the topics we discussed today, or talk more about a specific topic that interests you, you're always welcome to come on our podium and join the podcast.
Yeah, that sounds awesome. Thanks.
Cheers. Yeah. Whale Coin Talk community, thank you for joining. Remember that everything you hear on this broadcast is meant for educational purposes only. Nothing is financial advice. We have a Twitter space coming up at 4 p.m. Eastern Standard Time